the factors at play in terms of the market's close?
Yes, the market closed lower again, same as yesterday, as profit takers continued their activities. Basically, a lot of investors have been taking profits off the back of the 6-day rally we had, which lasted till Thursday last week. We've seen the banking sector bear a significant portion of the profit-taking activity, but it's been pretty much spread across sectors.
All right, now we've got Fidelity Bank, which released their results. Your impressions?
Well, Fidelity released after-tax profits, which came in a bit over 100% higher than the same period last year. Its gross earnings, on the other hand, were down about 36% to 27 billion. I mean, looking a bit deeper into the results, it's clear the dip in gross earnings are sort of in line with what we've had with the rest of the sector, as a dip in lending rates has affected interest income. But most of the banks have been able to support that with the bigger dip in deposit rates, which has improved their interest margins. Looking into Fidelity's results, a few areas of concern. Its other income dipped, for instance. We saw its operating income as a whole drop as much as 43%. Also, contrary to what we've seen with a number of banks, its operating expenses continue to rise, rising about 4%. But I think what's really boosted its earnings this time were the provision figures. It's only provided for a bit over $1 billion.
Deji, earlier on the CEO spoke to CNBC and indicated that the bank may pursue an acquisition of one of the rescued banks. But given their market position and also their capital base, is Fidelity Bank in a position to do so, do you think?
Well, they have the capitalization, that's for sure. They have a pretty high capital adequacy ratio. Considering what is prevailing in the banking sector at this point in time, it's obviously very difficult for most banks to grow organically, and a lot of them might be looking at inorganic means of growing. But there, of course, there are a lot of attendant risks with going down that path. Of course, being able to extract value is the biggest risk we see. Being able to really look objectively at the books of the bank to be acquired, of course, given the sort of toxic assets issues we've had, is one we see as a huge risk for any bank looking to grow inorganically.